Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into the latest quarterly report from ReposiTrak, a company working to keep our grocery store shelves stocked and our food supply safe. Think of this report as a financial autopsy that examines whether they made money and if not, why. We're going to tell a financial story that will have you at the edge of your seat, hopefully not asleep. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for all things related to investing in corporate finance. So what's the story this quarter? ReposiTrak is reporting increased revenue and profits thanks to a focus on new technologies. Let's jump into the details and see what's really going on under the hood. First, the big picture. Let's peek at the balance sheet. Think of the balance sheet as a snapshot of what the company owns assets and what it owes liabilities at a specific point in time. Digging in, we see their total assets are around $54.8 million. This is an increase from about $51.6 million back in June of the previous year. This $3 million growth says they're expanding, buying stuff and increasing cash. Zooming in, a big chunk of those assets is cold hard cash. They've got over $28 million sitting in the bank, which is up from $25 million, meaning they're making more than they're spending. Warren Buffett would be proud. They also have a bit tied up in receivables at $3.6 million, or money owed to them. This is like IOUs from customers. It's good to keep these in check. Now, for a number that seems intimidating, goodwill, which is worth around $28 million. Goodwill comes from when one company buys another. It represents the value that isn't easily put into tangible things. It doesn't change, so we'll keep an eye on it for now. Let's turn to the liabilities and stockholders' equity section. This tells us how the company financed those assets that we just looked at. Starting with liabilities, we see accounts payable sitting at a relatively small amount of around $286,000. Accounts payable is essentially bills they haven't paid yet, so this is their debt. They also have some accrued liabilities, about $1.1 million. Accrued liabilities are expenses that have been incurred but haven't been paid yet, like wages or services. Then there's deferred revenue or a contract liability, around $3.6 million. This is money they've already collected for services they haven't provided yet, like a subscription you paid but haven't fully used. This liability helps increase cash. Finally, we have stockholder equity. Stockholder equity is what's left over for the owners of the company. So here we see a big chunk in additional paid in capital of around $62 million and an accumulated deficit from previous losses of about $14 million. Altogether, this brings total equity to about $48 million. Altogether, this brings total equity to about $48.9 million. All cumulative, this brings total equity to about $48.9 million. Moving on to the income statement, this shows how much money they made and spent over the last 3 and 9 months ended in March of this year and compares that with last year. First up, revenue. The total amount of money they've brought in. They reported $5.9 million for the last 3 months compared to about $5 million in the same period last year, showing good growth. But making money costs money. Their cost of revenue, which are the direct costs of delivering their services, was about $911,000 compared to $31,000. They spent just over $1.4 million on sales and marketing. This is less than their previous spending, but that helps them to keep their operational costs lower. After subtracting all these expenses, they end up with income from operations of around $1.8 million in income, which is up from $1.2 million compared to last year. This means they're getting better at managing costs. Then they also have some interest income, about $326,000, which is how much they earned from having all that cash in the bank. They then have to take into consideration taxes, about $150,000, before finding their final net income of $1.9 million for the quarter after subtracting preferred stock dividends. This is a large increase compared to last year at about $1.5 million for the quarter. After subtracting preferred stock dividends, this is a large increase compared to last year at about $1.5 million. Another important metric, basic income per share. For the quarter, it's 0.10 cents per share. It's a good sign that they're profitable on a per share basis. Now let's hop over to the cash flow statement. This tells us how cash actually moved in and out of the company. The cash flow statement bridges the gap between the income statement and the balance sheet. Starting with cash from operations, they have over $5 million generated in the 9 months ended this year. Moving into investing activities, we see they bought some equipment just under $10,000. All in all, they made roughly $6,000 from investing activities, which isn't a lot, but still helps. Under financing, we see a few things. They spent about $100,000 on buying back stock, paying dividends on both their regular common stock and preferred stock, and payments on debt, resulting in about $3.7 million going, $7 million going out. All these in and outs lead to a net increase in cash of roughly $2.9 million. Not bad. All this is why their cash went from about $25 million in cash. A big amount that goes into stock to pay accruals of roughly $29,000. A lot happened with the numbers. They did issue some stock, bought back stock, and paid out some dividends. You might have noticed shares being repurchased to reduce shares and the stock price to increase, which might benefit investors. The thing that you really want to be on the lookout for is the part where the company uses cash to repurchase shares. Some might think this is great, but it's actually a big red flag to take note of, and is something that Warren Buffett advises to be wary of. Ask yourself, is the money better used in operations? Finally, let's touch on some of the other things in the report. They go over what ReposiTrak actually does. They're in the software business, mainly helping food retailers with safety, compliance, and making their supply chains run smoothly. They operate primarily through 3 application suites: compliance management, which manages regulatory paperwork for suppliers; traceability network for the FDA and for Walmart. In the numbers, they go over a few accounting things and also mention that their revenue recognition is on point. And it's very important that as they're expanding into more complex fields such as FSMA 2004 compliance and RTN, they get all the correct accounting procedures. As a software company, the company only has one operation segment, which is good. As far as accounting goes, it's much easier to operate that way. Nothing else particularly stands out other than an explanation of their preferred stock redemption plan, which we saw the effects of on the cash flow and balance sheet. Finally, it closes out with subsequent events as the report comes out after the quarter, so we need to be aware of anything changing. They claim no major events occurred, meaning they didn't forget to mention anything important. And now what's our take? ReposiTrak is in a good position. I really like how the numbers show a lot of stability and the leadership team seems very consistent. They state nothing really changed, which you would hope to see. The risks? They compete against giants that are much larger, such as Amazon, Oracle, or SAP. The FDA requirements should help them as smaller retailers will want to outsource the technology to them. Ultimately, I think that this company is a long-term hold with not a lot of downsides, but the main caveat is to keep an eye on new competitors that may try to enter the supply chain business. Alright, that's our breakdown of ReposiTrak's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.